I'm Chris Blewett, Head of Intermediary Distribution at Darlington Building Society, and I'm joined by James Travers, one of my BDMs, and Tom McSherry, who, what that man has forgotten about self-build and custom-build mortgages is probably more than James and I know collectively. So a real expert with us today, which is brilliant. So thank you both for being here. The reason for putting this one on around kind of home building finance. So I've said self and custom build, but it covers more than that. It can be renovation, it can be knockdown rebuilds, it can be, you know, heavy refurb, as I'm sure Tom and James will go on to it. I talk an awful lot with clubs and networks at a strategic level, and they all tell me that they wish their brokers, that people in their firms were more comfortable with stage release mortgages, with self-build, with custom build, and with helping their clients. And then what they kind of go beyond that is you talk to some of the advisors, and it's almost like they get like saucepan eyes and sweaty hands the second you mention anything around stage releases and custom build and self-build. And it kind of came out about a week or two ago, which was really good timing, that self and custom build specifically is expected to be the UK's 4th largest house builder this year. So obviously we've got a push to 1.5 million new homes. I won't get into the politics of whether or not that's going to happen or not. But in amongst that, the 4th highest is expected to be the self and custom builder. So you've got the three big players, then people building their own properties, then you've got the rest there, 5 down to kind of wherever. So it's very, very prevalent. It's very, very prominent in terms of kind of government focus. The clubs and networks are saying that they want more people to do it. I think what's interesting, if you kind of wrap a little bit of a consumer duty lens around it, and Tom, you and I were talking about this in the green room, is quite often people go in, talk to their broker and go, this is super complicated, I want to build a property. And a bridge is almost the easiest thing to look at. You know, we can give you the cash, we can sort you out an exit when it's habitable and everything else. But then what you've got is a ticking time bomb. And as we know from our side, projects that are expected to take 12 months take 18, projects that are expected to take 18 take 24. But the reality is, and Tom articulated this really, really well, is actually there's holds up with local authorities, even getting you the building reg sign off. So actually, if you've got a 12-month project, you need to really be finished in 6 to 7 months to get any chance of getting the right paperwork, and then the remortgage offer, and then the completion by month 12. So I suppose everything comes nicely together to actually the industry knowledge on this subject is not high enough. And that's why we're here to talk probably 20 minutes, and I'll do some wrap up at the end of real short, sharp education. It is worth pointing out this is being recorded, and that will get sent out afterwards, along with CPD certificates. I'll cover that offer at the end as well. And it will also go onto the Society's YouTube channel. So if anybody wants to kind of share it or pick it up thereafter, you can do. Final point before I hand over to our 2 experts is we do have a Q&A. So at the top along your screens, you'll see a little Q&A. Pop any questions you've got in there as we go. I will keep an eye on them, and if they're relevant, I'll raise them at the time. If not, we'll keep them to the end. It is very possible that we won't have enough time to get through all of them. So what we will do is anything we can't answer live, we will answer separately and send it out with the communications afterwards, along with your CPD certificates. So that is enough from me. Hopefully the scene's set, and I will hand over to James and to Tom, who will take you from here. And I'm going to make some notes as well, because I imagine there's some good CPD in from me, even though I deal with it every day. So gentlemen, over to you.
Thanks, brilliant. Thanks, Chris. Hi, Tom. It's great to have you on the webinar today. This is our 3rd one, actually, and they seem to be doing really, really well. And I'm sure between us, a man of your skills in the self-build sector, who's done it himself, and us who partnered with you for, well, my whole tenure at least, so 10 years of providing finance for all the different things we're going to hopefully chat around, and the fact that I've made my own man shed in the garden, I think everyone's in safe hands with us today. Yeah, it's as good as, isn't it? So I know we can probably talk quite a lot around everything that we're going to go through. So I'm going to kick off with our first of 5 myths. Now, we probably get it quite a lot from a lender point of view, that people, brokers, applicants, clients just want to go direct to a lender to get finance from them. Is that the easiest way? Is it the only way? Are they missing a trick if they just try and do that, Tom?
Yeah, I mean, I think probably, and thanks for inviting us, first of all. We genuinely do appreciate it. I think before joining Build Loan 20 years ago, I was an advisor previously for 15 years, and I probably had a couple of cases that I dealt with, but to become really had to have a level of expertise to deal with it properly, I wasn't dealing with it regular enough. And as an advisor, I think having a proper support process and a support network around you, when you come across something that hits your desk occasionally, particularly with consumer duty now, I think this is really important to keep that at the heart of today, is the opportunity for the foreseeable harms when you're dealing with a transactional buying a house for a client are limited. The opportunity for a foreseeable harm on a construction project, it seems to be are considerably higher around build costs, scheduling and detailing cash flow, understanding does the lender support the building system, the cladding, the roofing material? Does the lender lend if there's an adjacent plot that's got a family member connected to it? All of it, and none of the sourcing systems provide with the level of detail and expertise to bring a lender to the lender in the first place with the right criteria. What Build Loan has done over the last 25 years or so is create a process and a guidance and support for mortgage brokers that even if you're dealing with it fairly regularly, then Unicus platform, which allows brokers to then really do a meaningful fact find. If you don't ask the right questions, you'll never get the right answer. So it's getting the right level of questioning to allow us then to find the lenders across the marketplace who will support the project. Unfortunately, the sourcing system has got a box that says this lender does self-build. There isn't anything that says barn conversion, renovation, property extension. There's nothing within the criteria in the sourcing systems that tell them whether the money is based on the valuer's value at each stage. Does the client need to fund the stage themselves? What happens if it doesn't increase in value? Or is it guaranteed stage payments? It does nothing about materials. So I think, yes, there is brokers and will go directly to lenders, but unless you're dealing with it regularly, I think there's an opportunity for foreseeable harms to happen quite early in the process, because ironically, and you'd have to trust me as a miserable Scotsman, I care about interest rates, but this is one of the few times where interest rates lead. This is where the cash flow leads. When does the money arrive in the client's bank account to pay their manufacturers, their timber frame company, their builders, professionals, builders, merchants? When does the money arrive on site? That's what the products have to deliver.
Yeah,
and of course,
that's where you guys really kind of come in. It's that support, isn't it? If you have a broker that's never done it before, and let's face it, you know, not every broker out there is going to even touched a self-builder, spoke about it before. You guys are really going to help with that almost hand-holding through the process to get them and the client the best possible outcome.
Yeah, I think you put it right in terms of hand-holding, because that can be from an embryonic, first of all, picking up the phone to the broker desk team, which I would encourage anyone with a project like these things can sit on your desk and move around for days till you try and work out what you're going to do and where you're going to go. Lift the phone to the broker desk team. They will very quickly let you know whether the project's supportable or not, and who can support it. But it's more than that, because it's moving through those processes that I've mentioned around. We have a team of independent build specialists who will analyse the build costs for the client. I think it's unreasonable to expect any broker to know whether what the client's presented by way of plans, drawings and costs are enough to complete the build. But of course, if the build isn't completed because of irresponsible build costs, then there's a foreseeable harm happened. So the first tier of support is that ensuring that the build costs are right, and we have professionals that do that. And that protects you as a lender as well. But then we're modelling the cash flow to make sure that the money arrives at the right time when it's needed. But more importantly than that, it's us that's dealing with all the stage releases and the build monitoring, which is under the consumer duty. How do you support your client achieve your goals, financial goals and objectives? Well, supporting them is holding their hand all the way through the project. We take a big part of that responsibility and do that on behalf of the broker community.
Yeah, and you do it fantastic. You know, as a partnership, it works really well. I think, I know you've mentioned cash flow quite a lot, and I think my naivety coming into this industry, I always thought that people who did self-build were millionaires. Now, I don't know if you're a millionaire, Tom, because I know you've done it yourself, but that's a myth, isn't it? You don't have to be a multi-millionaire. You don't need thousands and thousands of pounds of savings to get you to certain points in the build. There's so many different products that you have access to with loads of different lenders that suit so many different situations. That is a big myth, isn't it? That you need loads of savings.
Yeah, I think we might as well bust the big one today. That's not my house in the background.
Tom, I thought you were sat in Marbella, your self-build Marbella there.
my home is, my self-built home is far more modest. We had completed a renovation project, which was alleged to be our forever home, and I was offered an opportunity to buy a plot at quite a discount. And took up that offer and went about designing a modest home. And I'm saying modest, the design is what can control the cost. You know, if you want to make it complicated, H-shaped with mono-pitched or dual-pitched, it can get ridiculous. Designing houses not too dissimilar to what a house builder will do. The reason they've got boxes is you can repeat it and you can keep the cost down. So I designed a simple house, but it was more important. It was about having the quality of the house, the materials, having it laid out the way we wanted it. But it definitely can be done at a budget. And the reason it's so attractive to many people is, you know, the ability to design your own home. I can't imagine why, if you weren't given that opportunity, you wouldn't take it up. But building a quality, you know, many self-builders, renovators that we deal with, they're taking the house closer to passive level rather than simply trying to attain building regulations. So it's the quality of the home and having it suited to your family's circumstances, and often where it can be flexible enough to suit as our life changes. But it's the stamp duty is only applicable on the plot. It's exempt from VAT. So from that point of view, there are savings to be made, which is why it's a popular thing. And I think probably the biggest part that Build Loan plays, and you'll know because we have that seat at the table with you, is that product design, where we've created products that meet the demands of the public and supported by building societies. That's a huge shout out to building societies, because this is the home for this sector. And products now where the client needs a 5% deposit. You know, the biggest deposit you'll need is 15% of the land and build costs to step in to do this. And for anyone who already owns land or a property or it's been gifted, they can secure the project with 100% of the build costs.
Yeah, and I think probably a game changer, which has really helped people, especially with that cash flow, is our advanced product that we have, where we will give you the funds up front. You don't have to put all your savings in to get the foundation stage, and then we go out and go, hey, you're definitely at them foundations, here's the money back. We can give you up front to get there, and that's been a big help in that self-build sector.
Yeah, I think, I mean, that was a major change, and unlocking the sector to allow it to be volumized in some way, where, you know, your product at 85% of the purchase price of the property, the land, and 85% of the build cost, where the client gets the money before the stage starts. That works brilliantly when you're embracing off-site manufacturing, which the vast majority of home builders now will use timber frames, structural insulated panels, insulated concrete formwork. And again, the sourcing systems don't tell you what lender supports what. So going direct to lender, you are exposed to, again, some risk there. Yeah. But the ability to have the funds to pay them, because off-site manufacturing is something unique, 10% to put it into the design room, 40% to put it into the manufacturing plant, and the balance before it leaves the factory. Now,
it's a big chunk, isn't it, up front?
That's a big chunk of the money. It could be as much as 30-40% of the total cost, because it could include a window package, internal partitions, doors, skirtings. All of that has to be paid. That's not added any value to the site. What it's done is front-end loaded the cash flow, and your accelerator product that we designed a lot of years ago puts the money into the bank account to pay for it, to allow it to leave the factory. So it's, you know, and this is again going back to how sourcing systems are problematic to help you as a mortgage broker get to the right solution, is the difference in the cash flow, and that can come about by the choice of building system. And it's where the sourcing, the system that we have, Unicus, will ask all the right questions to allow us to tailor that solution.
Yeah, and that is great. So the big takeaway there is don't need masses of savings.
Yeah.
Build loan, build sort will help with that cash flow to make sure the right product is matching with the savings that you've got.
Yeah, and the product choice. I mean, please, that the customers should be embracing if they want to use off-site manufacturing or what's known as modern methods construction. Sometimes, you know,
We do
allow
like that
them to
here, Tom.
embrace
We
it.
love a bit of MMC.
Yeah, I know, and again, the building societies are agile and supportive, so that's exactly where the solutions lie.
Yeah, it is. It is. The next myth, this is a big one. I think every broker comes across this. They've got a client who's wanting to buy a property, hasn't got a kitchen and bathroom in. It's not habitable. What they're going to do? It's only a bridge, isn't it? A bridge is the only possible answer, Tom, isn't it, in that scenario to get it to a mortgage?
Yeah, it's interesting. If we had more time today, it'd be great to do a poll to say, well, how many of you today would go to a bridging solution if there's holes in the roof,
Yeah.
there's holes, there's no kitchen, there's no bathroom. You're absolutely right that for most people, and it's just a matter of training and understanding that these are not self-build mortgages, they're stage payment mortgages for home building projects. So, you know, if you're able to take a barn that's 4 steel pillars and a corrugated roof and do a stage payment mortgage, quite clearly, if you've got a house that isn't habitable and you want to retrofit it, perhaps extend it, convert the loft, this is the product suite that gives you that low risk solution where, first of all, it is mortgageable, and in your instance, you can get 85% of the money to buy it. Going direct to lenders who don't have guaranteed stage payments like you do, stage one of that stage two of the project is where you start to strip it. You know, the old windows come out, there may be some underpinning, there's perhaps insulation going into the floor, it's new roof trusses, new roof goes on. It's going to go down in value. You know, stage one, stripping something and creating openings, the property's no longer wind and watertight, so there's a real prospect that the value will go down. If the value goes down, most of the direct to lender products are based on, in fact, I think all of them, you require the funds to pay for the stage. Now, having paid for the stage, the strip out, the valuer comes out and revalues it. And if it's valuation based lending in arrears, the customer gets money if the value goes up. Now, we know that the value is not going to go up. In fact, it's going to come down. So they're not getting any money. So when will they get money? Well, neither I can't tell you, neither can you probably as an advisor know, because it's only when the value increases. Is that when it's back at wind and watertight? Not sure. It's probably when it's at the first fix. So
sounds like, Tom, that goes to our other question of you need loads of savings. So if you're going direct to a lender, exactly, you're going to have loads and loads and loads of savings to be able to do that.
Yeah, that and a bridging solution, because the bridging will only ever be in arrears. So if you're looking at what maximum 70% at purchase, but then we're stripping it, and then we need a big chunk to take it back to wind and watertight. As an advisor, you need to be confident and have the ability to make sure your client knows how much they're getting at each stage and who's in control of what they're getting. And that advanced stage payment model and the guaranteed stage payment model will give the client the money at each stage, even if the value is decreasing, because they're contractually agreed up front. You've removed the risk of the client not being able to meet payments to professionals. And of course, what will happen is the project will run smoother.
Absolutely.
You know, having the money to begin each stage is what it is. What it does is it allows me as a renovator or self-builder to go to the builders merchants and not have to run credit accounts. I could pay my tradespeople on a more regular basis than after key stages of the build. I can work with off-site manufacturers if I'm building an extension or in a barn. Many occasions they'll slide a timber frame system down the inside of it to create that brilliant thermal performance inside the old barn. So you know, there's almost a hybrid in the systems. But again, you're then working with off-site manufacturing with upfront payments. That product takes away all the risk for it.
Yeah, it does. You've mentioned extensions there, which is a really good one, which again is an often question that comes up on our help desk. People who are wanting to do an extension, lenders would only base it on the valuation of the property now. So if they wanted more funds for a big extension, it would only be based on the value if you went direct to lender. What can we do with what we offer, Tom?
Yeah, there's a couple of really important points on it, actually. You know, if you're changing a kitchen or updating a bathroom, where you're doing some very light internal work, it's probably savings, or it may even be a remortgage to lift some equity, you know, if a product's coming to an end. But anything beyond that, probably, if, for example, building an extension, at some point, you're going to create an opening at the back of the house that allows an entrance into an extension. So you're turning the house into a building site. So you need to question whether the existing buildings and contents insurer will continue to insure the property, because you've taken it from a habitable home into a building site. And of course, if you don't have buildings and contents insurance, have you invalidated your mortgage on your existing product? So that's a key consideration to think about to begin with. But whenever we start to look at extending and doing some more significant renovation work, then the very same products, these home building products, a good example, if my house is worth 300,000 and I've got a £275,000 mortgage on it, and I want to stick an £80,000 extension out the back, if I go to a mortgage broker and say, how do I do this? The chances are the view would be I'm very limited, because you can't take anything out of the property. There's not enough equity.
Yeah.
So it's limited to, and last weekend I was at an event and the client was encouraged to take out a couple of personal loans and rack it up on credit cards. And well, the reality is, you can take it to a home building project, home building finance, where we can get 85 or even up to 95% in occasions of the current value, and up to 85% of the build costs, because your lending is underpinned by the end value of the project when the conversion's finished, not limited as a high street bank is to the current value of the home. All of a sudden, the client, rather than having to take out two personal loans and rack up credit cards, can 100% fund the project on a product that's tailored specifically for it, that there's no need for interim valuations, there's guaranteed stage payments, and if they want to build an ICF or a SIPS or a timber frame extension, we go advance where we can pay the supplier on time. So it's relatively straightforward, as long as the knowledge is there that the products can support these things.
Yeah, I think the big things that we see with the extension is it is really a good idea to come to somebody, you know, like us, where you can have those guaranteed stage payments, and we base it on the end value for a couple of reasons. One, how many times do people run out of money? Happens all the time when they're trying to finance it themselves. But if you're putting the money into an extension, you want it to be exactly how you want it to be. That's the beauty you've come into us. You're going to get support with your cash flow. We can make it work from the end value and work back on exactly what you want, rather than financing it on loans, as you say, and think, oh, well, I wanted this, but I didn't realise the roof was going to take that long and cost that much. So now I'm going to need to scrimp and scrape on the kitchen, and people end up not having exactly what they want.
Yeah, and of course, your product's interest only the minute we move it into the construction phase. So, you know, you've got rates at 5.4%, you know, which, when you consider where the residential market is, your stage payment mortgage isn't far apart from that now. But that concession of interest only during the works, and then having a product transfer onto your leading rates again, it's a brilliantly well-tailored solution. If you think, you mentioned that the self builds, it's the third or fifth biggest house builder in the UK as a collective group, you know, and it's difficult to work out how many there are, if it's somewhere between 7,000 or 8,000, 9,000 a year. But there's probably 250,000 people renovating and extending their homes, and estate agent windows are full of cash buyer only. You know, how many mortgage brokers are in and estate agents where in the window of the shop will be cash buyers only. It's not cash buyers. The renovation mortgage will help your client purchase it and restore it and renovate it, with the end value of the project being where we're borrowing up to.
Yeah, you're right, Tom. And the good thing, as you mentioned there, once that build is complete, that's complete, doesn't need to be signed off. You can PT it on our standard product range. Yeah. That's good news, because that window can sometimes be up to 6 months where they're still on a self-build product. And the really good news is we'll pay 0.3 for that PT to you brokers. So
paid twice.
Good, yeah. Right, Tom, we've got one more quick question, and then we're going to have a little wrap up from Mr. Blewett. So, excellent. Custom build sites, they're a bit complex, aren't they? People stay away from them. Don't want to dip a toe into them.
Or it's probably worth.
Yeah, it's probably too scary.
No, it's probably worthwhile just in case anyone isn't aware. In England, there is the Self-Building Custom House Building Act, which and also you have the right to build legislation, and it's probably one of the best kept secrets in England, where every local authority in England must maintain a register of anyone that wants to build their own home, and they must commission sufficient planning permissions to meet the demand on the registers. We reckon there's somewhere around 60,000 people on the registers, so quite clearly a significant demand on something that's a well-kept secret. The planning authorities are putting calls out to SME builders, developers. Private landowners are bringing land forward for multiple plot sites. So it's enabled self-build or custom build, where a developer is putting in the roads and services would be a good example. And there might be 5, 10, 15 plots being brought forward for like-minded people to step into commissioning their own home. And it's actually a very de-risked version of self-build, because the planning's taken care of, the groundworks conditions, all the site inspections, newts, slow worms, bats, all that stuff's taken care of. I'm buying a shovel-ready plot to enable me to, as a broker, you'll be giving advice to maybe not just one, but numerous people. There are some underlying things in terms of preparing a development. So if you come across these, it's really important. Like the new build market, you as a lender will only take so many plots on a given development to manage your risk. So at Build Loan, what we do is work with brokers who have identified these opportunities to make sure that panel of lenders gets put in place, to make sure that the suite of products meets the site. It's almost getting a pre-agreement for the development before it goes live. So if the developer wants to use some off-site manufacturing or modern methods of construction, you as a lender already know before the application gets there, because we've prepared it for you. Having that guaranteed stage payment is really important, to ensure that, if the build costs run ahead of the value and someone runs out of money, there's a bad tooth in the middle of the development potentially. Guaranteed stage payments work brilliantly well for custom build, because there's a developer in contract, and you as your client needs to make sure that they can meet their contractual payments. Guaranteed stage payments does it. So I mean, if you come across these opportunities, they're no more complicated. What there needs to be is quite a bit of preparatory work done to ensure that it runs smoothly, and you're not sending someone to a lender who's perhaps used up their allocation on the site, or doesn't understand that it's a multiple plot site. Some lenders that do self-build don't do custom build. So it's important that we put the structure in place, but it should be with the right support with the Build Loan team. You as a mortgage broker are given advice from a KFI, from a lender, or an ISIS, from a lender who's already supporting the project. It shouldn't be any more complicated, with the right structure and work done in advance by us.
Brilliant. Thank you, Tom. I think we're bang on 11. So, Chris, I'll hand it back to you for a quick round.
Yeah. Thank you very much, James. Tom, that was brilliant. I think the big key takeaway from me, and Tom, I just need a nod, is if there is a difference between the property's current value and the end value, think home building finance. Don't just think bridge. Don't just think it's not supportive. Just think, actually, there's a better route here with some guaranteed stage payments, as opposed to throwing it all up in the air and hoping it lands in the right format. So yeah, really good. I learned a lot there, and I deal with this every day, so that was brilliant. As mentioned at the start, we will send out CPD certificates for everybody who has attended. We've recorded it, so that link will come out as well. We run these webinars every couple of months, so we've got another one coming in January time. So if you keep an eye out on our LinkedIn page, it'll have the link to the invite on there when we decide the topic. You can also subscribe to In the Loop, which is our kind of weekly or monthly, we kind of like roundup of all these things, so any thought leadership and stuff like that. So if you have enjoyed this, that is a really good snapshot of everything that we do in terms of education over a monthly period. I think all there is left to do is just to once again thank James and to thank Tom, and also for everyone who's attended, thank you very much. Hopefully that was 30 minutes well spent. And if you need anything thereafter, reach out to either Tom at Build Loan or James, and they will happily spend some time talking through custom build and home building finance. Thank you all very much.
Thank you.
Thank you.
Have a great day, everyone.
Take care.